is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to our man Jim in Palm Harbor. Hey, what's going on, brother?
Hey, how you guys doing today?
Doing great, man. How you been?
Oh, great. I really appreciate you and Tommy. You do a great job, great work, and I really appreciate it. I watch you every day.
Well, thank you so much. We appreciate you growling and prowling with us out here, man. Let's go to Sylvia in Tampa. Hey, Sylvia, how you doing?
Hey, Tom. Good morning. Thank you so much for taking my call. I want to tell you thank you so much for the advice you gave me on dust yesterday. I exited when you told me, and I made a healthy profit for a very short period. So thank you.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. It's making a great night, folks. We got some big action coming up here next hour and a half. Don't make assumptions. Ask for what you want. Find the courage to ask for what you want. Others have the right to tell you yes or no, but you always have the right. Likewise, everyone has the right to ask you for what they want, and you have the right to say yes or no. Market-wise, let's take a look at it out here. We have the Dow Industrials down 109, NASDAQ up 39, S&P's flat. Gold contract down $12.20, trading at $13.07 an ounce. Silver down 21 cents, $16.10 an ounce. Let's go over to the gold contract first. So slamming gold out here, been slamming it a few days. Got it under the consolidation. The consolidation out here we're talking about is 1309.30. We're still under the consolidation. You've done 260,000 contracts. Bottom line is that we'll see whether this can get up above this 1309.30. Silver, we take a look at silver. Same type of setup inside the silver market. Silver's down 1.2%. You're down 20 cents. You got under the consolidation. That's $16.18. Now, this is the cool thing with silver. Silver's back inside that number. So we'll see where this shakes out going into the close. What we do have out here is that the equities have just refused to back down. The GDX right now, it's only up 4 cents. That's not a big deal, but guess what? It hasn't backed down as the gold contract has backed down substantially from its highs. The GDX, the last high out here was April 17th at $23.30, or a buck underneath it. That's rejected lower price out here. Bottom line, it wants higher price. So it's going to be wild watching this baby shake out tomorrow at 2:30, because that's what it's going to be all about, at 2 o'clock actually. Oil, we're going to be talking oil this afternoon with our man, Mr. Andy Heck, at 4:30. Oil right now is trading down $1.13, $67.45. If we take a look at this oil market, what you have out here, oil's backing down, folks. With light volume, that's saying that oil still wants higher price. We've done 652,000 contracts. Well, that's picked up a bit. Yeah, that's picked up a bit. Hasn't broken the swing, but it's going into 675. Oh, this is going to be interesting watching this just shake out. Okay, so 675, it would still have to get down another $66. I'll have to go quite a way. This is, if we stay where we are, this contract still wants higher price. We broke topside, $69.55. That's still game. Notes and bonds. Notes and bonds, they're going to be rocking and rolling big time coming out here tomorrow. We have the 10-year note down 7 ticks, 119.13. You've done 824,000 contracts. That's anemic volume for the bond market for the 10-year bond as that baby's pulling back. You're pulling back into 1.3 million contracts. You're pulling back into 1.6 million contracts. You're pulling back into 1.29 million contracts. Bottom line, that wants higher price. King dollar. What do we have with King dollar? King dollar's hanging high, man. King dollar's up there, trading at a price up 650 ticks. You're at 92.280. You swing up, there's 92.020. Took that out. So what I expect you're going to see with King dollar is that what we're going to get, more than likely, is we're going to get some kind of a spike when this announcement, the statement comes out tomorrow. We'll see whether it holds. The next swing point on King dollar is another basically penny up. You're talking 93.40. 480. If we take a look at some of the higher volume stocks out here today, you have Bank of America is down 7, Pfizer's off $1.60. You have, let's see, Microsoft's up of $1.30. Match is getting smoked, man. This thing is accelerating. So intraday, let's pull this up so you can see what happened here. Intraday, let's see, this happened at 120. At 120, Match was trading $46. Now it's $36. And if you take a look at this, what you're going to see, this good old February 9th is one nasty day, man. Where is it? February 9th, and this one, well, we haven't made it down there yet. That's interesting. So this day actually didn't have a high volume low on February 9th. It's there anyway. We're at 36. The high volume, well, 38 is the last time it had any volume. This thing is destroyed right now. IAC Interactive, this also got destroyed intraday. This is down $25. You're trading at 136. Now, this did have a February 9th high volume low, and it took it out. Well, it took it in an hour. 130.19 is the high volume low from the 9th. The high of that is 138. You're already into it. You get monster volume, and let's see. So now you're gonna have volume. Well, we'll see how 123 holds. And what was this all about? Well, if we go over to Facebook, what you're going to see, Facebook, here we go. Facebook announced it's rolling out a new dating feature, sending shares, of course, in Match, as well as interactive plunging. The feature would help connect people who aren't Facebook friends and be for building real long-term relationships, not just hookups. Let's see, said during the presentation at the company's F8 development conference, Match, which owns apps like Tinder and OkCupid, fell as much as 21%. IAC fell as much as 14%. I'm trying to figure out what IAC owns. What are the, okay, let's see if we're focused on the dating feature. Match was spun out of IAC in 2015, but many analysts, I see what's going on, say that the majority of IAC's value still derives from the unit. I got it. Okay, so if we pull up Match, let's pull up Match again. So I see what's going on is that IAC owns the stock in Match, and that's why this is coming down so fast. This is pretty wild. So let's look at that. Pull that up. There it is. I see. So they, oh man, this gets to be a trip. So picture this, Match, MTCH, man, you gotta love this one. Just there's so many, basically, different details in some of these things. So IAC owns 14.3 million shares, and that just got whacked $10. There you go. That's what that's all about. Stay right there, folks. We're coming right back. Our phone number is 877-927-6648. We have the Dow Industrials down 135, Nasdaq's up 35, S&P's down 2.5. We're coming right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We have the Dow down 145, NASDAQ up 33, S&P's off 4.5. Let's go over to our man, Mr. Basil Chapman, as we do each and every Tuesday at 20 past the first hour. And, of course, don't forget, Basil's got an outstanding show right here every trading day, 12 to 1 Eastern Standard Time. Also has a great newsletter, The Opening Call. Now, the way you get this opening call, 30 days money-back guarantee. Come over to our website at TFNN. Go to newsletters. Go to trading newsletters. See the opening call right there. Check it out. 30-day money-back guarantee. Basil Chapman, what's going on?
Hi, Tom. How are you?
Good, man. Yourself?
Very good. Thank you.
So, what are we doing? Are we rocking? We rolling? Which way are we going here?
We're starting outdoor tennis today. That's important.
Oh, that's awesome, man. Oh, yeah. Good for you. It's about time, right?
About time. Waited for that. Yeah.
That's good.
Very nice.
So,
yeah.
You got a little spring coming in. That's good.
Finally, yes. So we're looking at the Dow. Hopefully the Dow's going to find some spring at this point. What we're looking at, I've been discussing this for a while, from the 26th of January at 26,616. Dow makes a peak D-top in the Chapman wave and plummets down to the 23,360 level. Now, the Dow is the only index that went and tested and broke its February low when it came down very sharply, and that was at 23,344 back on the 2nd of April. So we're 1 month away, and all we're doing, it's so interesting. You know, we're only at 24,000 right now. We're less than 1,000 points from that low, and yet we've spent all this time chopping. And yet, if you look at my chart, you'll see that I drew the template that I've been expecting, showing my subscribers what we're anticipating, and that lowercase h goes to a lowercase m. It just it elongates and it starts to get narrower. And that's kind of what we're seeing right now. And you can see it a little bit better in the weekly chart. So we were short the Dow at some point, and then we took profits, did trade the upside, traded the downside. Now we just kind of stepped aside, waiting to see what happens, because we're getting extremely oversold in some of the areas like the semiconductors, maybe even the QQQ series on the shorter term. But I still think that we're in a big consolidation. If you look at the QQQ, which is the NDX 100, and we were very fortunate, we got short within an hour of the all-time high. The all-time high was on the 13th of March at 175.21. Once again, we're looking for that Chapman wave peak D, and we got that. So we took real nice profits on the way down, sort of stepped aside now and just waiting for another rebound. And I think here as well, if you look at a number of these stocks, they're starting to form some kind of a base. But I wouldn't be surprised if we're looking for at least another whoosh to the downside. And that says that at 162 in the Qs, that's the Index 100 trading vehicle, the PowerShares Trust Series. I think from my weekly chart, the technicals are not very strong at all. So I'm looking at that, and in both the Dow and the monthly chart and the S&P and the QQQ, the Index 100, the monthly charts are still very good. So I'm expecting that this consolidation continues. We've had a very interesting thing. You remember I spoke to you actually a couple of times over the last 6 months, and it's about 5 months. I've said that we've been long the dollar periodically, and once again, let me just get this chart. We've been long the dollar from the 6th of April.
Yes.
Down at the 90.02 level, and here it is at 92.43. So during my show, my Tiger Technician hour this morning, I was discussing a number of charts, and I mentioned the importance of something like the 200-period exponential moving average in the daily chart. You don't even have to think about it once it breaks down significantly, but as soon as it starts to get closer, and you can see that back in November of last year, it tried to get close, it couldn't get to this orange line. Finally, today we broke that orange line, and that's really important for me because it means that it's like a magnet, and it says now there could be a little bit of a pullback, there could be a rally, but chances are we're going to dance around this particular level of 92.20, where the 200-period moving average is, because it's now both a magnet and a support level. So this is very important. If you're looking at the euro and you're looking at the other currencies, you'll see that they're weak. The yen is rallying with the dollar in the same direction. So to me, this is very important because my weekly chart has almost touched the target we had of 92.64, which is the high back in the week of the 12th of January in the dollar index. And it's getting to a little bit of resistance, but the technicals in the weekly chart have improved a lot. But what really impressed me is that the monthly chart technicals all of a sudden have come alive, and I'm starting to see some improvement. It's not that they look great, it's just that it's a real big improvement since it's such a heavy decline from the 103 level back in a year ago. That was in January of 2017, was at 103.82. Yes. So it plummets down to the 88 level. So this is the first really decent bounce where the technicals have improved. So I'm watching this closely, and you can see the mirror image of gold has pulled back, although it hasn't pulled back to the extent that the dollar's actually broken out. So gold, I think, is still holding quite well considering. So that's one of the things. A stock that we've had actually, which is very interesting. I had this. It's called Jiffy. GIFI is the symbol. Gulf Island Fabrications. We got it at $9.95 on the last week on the 26th, and it spiraled up to $11.60 within a day. And then it's pulled back. It went to the target that we had and filled the gap, and even now it's holding quite well. And this is a very interesting stock because it's in an area that really doesn't get talked about very much. Fabrications, maintenance, and service structures in the energy sector. It also does shipping. So I think it's right now it's been in the right area. So I'm watching this closely, and as I say, subscribers have it. We'll see how it holds. And this is a difficult market in the sense that some stocks that looked as if they were going to do okay suddenly failed, and then some stocks that just blah, just there was nothing there, have suddenly spiked up, but they haven't held. So I think this is a period where fund managers are really looking, what is the theme? They're really confused, and that's showing up in the market. And so we're being a little careful here, built up a nice cash position. I think there's going to be some great buying opportunities over the coming weeks, and that's kind of our position right now.
Yeah, they're killing those defense contractors, man. They're down 15% in 5 days.
I discussed that on my show this morning. I said the PPA, and I've done this for weeks now. We've been talking about it because I keep getting calls about Raytheon, etc.
Right.
I said, you know, Power shares, aerospace and defense, even Boeing, which is the aerospace part of this, the defense part is the Raytheons, etc. They are getting clobbered, and actually for the world, that's a good sign because it's saying maybe the peace talks are going to come up with something.
Yeah. Right.
I like that, and not only that, there was no way to actually gauge when would these defense stocks go. GD is General Dynamics, Raytheon. When would they start to pull back? Well, they never did. Now all of a sudden, this is a very big pullback. My thinking is it's in the monthly chart, that it's more an intermediate-term pullback, and that'll be really good, I think. I mean, in terms of peace talks and things like that. I'm not sure the exact results, but this is a good sign so far.
Yeah, there's no doubt, man. Listen, folks, come over to our website at TFNN. You go to newsletters, you go to trading newsletters, to the opening call. 30 days, money-back guarantee, and of course, every trading day right here, noon to 1 Eastern Standard Time. Call them up, ask them the questions. Beautiful thing. Basil, have a great one, safe one. Hey, have a good tennis game tomorrow, too, man.
Thank you. Tonight. Thank you.
Oh, tonight, even better.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We have the Dow Industrials right now down 157. You get the NASDAQ up 37. S&Ps are down 4.5. And, you know, we were just talking about those defense suppliers, folks. Look at these stocks. This is just pretty amazing, actually. You get Northrop Grumman. That went in, let's see, 6 days from $359 to $302. Yeah, 50 bucks off in 3 days, 15%. General Dynamics, same type of setup. General Dynamics, 6 days, went from a price point of $230 to $194. Now, they are also, this is where these February 9th days come in, man. They are also below now the February 4th level. And if you want to see with General Dynamics, so last Friday we were talking about it. This was coming into the February 9th frame, way too much volume. 13.9 million was coming into 13.5. Bottom line, broke it. Now, guess what? This thing can get down to 187 in a heartbeat. Raytheon is just starting. This thing, you know, come down from a price point of 229. We're at 200 right now. Your high volume low is down there at 181. So I expect we're going to get down there. Now, we know Apple's going to be coming out with numbers this afternoon. So watch this. This is pretty cool. So if you're watching Tiger TV, you're going to see something cool here. I'm going to bring this over here. So what I have here is this. This is the whole Apple supply chain. If you happen to be watching Tiger TV, you're going to see how this shakes out. Now, if you're not watching Tiger TV, remember, folks, you know, you can get it real easy. Just go to TFNN.com, hit Tiger TV, or just go to YouTube, put TFNN in the search bar right on your phone. It'll come up. So what you're looking at here is this. Now, this is gauged by the amount of money that basically Apple is either giving to their suppliers, and on the other side of the equation, the amount of money that the customers are giving to Apple. So what you have here is this. Apple has 180 suppliers. They have 60 customers. How's that? This is, you know, like it's pretty wild watching this shake out. Now, I haven't gone through all of these, okay, because I knew I had this on here, and I just basically figured out how to pull it up again. What gets interesting is that some of these suppliers depend on Apple like beyond belief. Like, I'm going to bring this first one up. I'll bring the second one up. Now, this company here depends on 66.4% of its revenue. Let me pull it up on the other side, and then when I pull it up, I'll bring it back. So this is going to be, when I pull these up, some of these are going to be traded in Taiwan. They're going to be traded, they're suppliers over in Asia. That's what they are. Okay, so this is Pegatron. This is in Taiwan. Okay, so let me put this on top of here so we can see this chart. So this company here, you can see they trade, the symbol's 4938, TT's, the Taiwan exchange. If we take a look at this, bottom line, put this back a couple years, you're going to see that this has been going down from $100. 100 Taiwanese dollars. That was traded in July of 2017. You know, right now we're at 69. One of the American ones here, CGNX. Now, this is 20%. 20% of their revenue, this is from Natick too, this company, comes from the iPhone, comes from Apple. This stock here got smoked today down to $39. Right now you're at 45. We bring this back, and what you're going to see, this is off a high of 72. Now, and you get an ABC down. So let's look at this. Oh, this is a trip, man. Okay, so A point is 60. The B is 48, so you get 12 bucks. The C is 51. So you're talking 39. Oh, that's interesting. It was $39. We hit 39 right on the mark. Now watch what they said out here today. So what they're saying out here today, this was the 30th actually, yesterday, last night they came out. What they say is that their revenue for the coming quarter, it was $216 million. They figure now it's going to be $200 million to $210. They cite tough comparisons to 2018, particularly in the second half, due to anticipated lower demand from consumer electronics. They see revenue over the next 9 months relatively flat in total with comparable sales to 2017. So when you take a look at this, you can say, okay, this is 20% of their revenue is Apple. Bottom line, that's a fact. They're saying things are going to be flat. Okay, now let's go down a little bit more. Let's see. I'm going to pick out Sharp. Well, let's pick out the first one. Let me see if I can find this one. This person, these people, let me see if this is public. They get 52%, 52.6% of their revenue from Apple. HONHAI. There it is. Okay, so This is another, this trades also in Taiwan. Okay, let's put this baby up. Let's see what we got here. So this company gets 57% of their revenue. Okay, they provide electronic manufacturing services. Okay, so this is, I wonder if this is the, oh, this is Foxconn. Okay, cool. That's amazing, though, that they get 57% of their revenue. I never knew they get 57% of their revenue from Apple. If Apple wasn't around, they wouldn't have anything. So check this out. This is pretty wild. So last August, stocks at $122, you're 82 bucks. You have, it's not an ABC down. Put this on a monthly. So on a monthly, down on volume. Oh, it is an ABC down on a monthly. Oh, this is pretty cool. Okay, so your A point is 122. Your B is 90, so you get 32 bucks. So that's saying we're going to go to 64. 66 is a swing. That's not a good. That's not a good indication. That's not a good indication that. That's pretty amazing, though. They get 52.6% of their business from them. Okay, we're going to do one more. Quantum Computer. They get 59% of their business from Apple. So that's QUAN. Okay. Okay, this is in Luxembourg. Interesting. Oh, no, this is Taiwan Exchange, too. Okay, so let's bring this one up. Okay, take a look at this. This is trading $54. Manufacture. Okay, so they make notebook computers and related peripheral equipment. I mean, unless Apple's been squeezing these guys beyond belief, it seems that each one of these are down substantially. Yeah. So this is this stock, and they're all from July of last year, $80 to $54. And this is, yeah, okay, so 42 million, takes it out with 37, takes it out. This is a mess. Well, we're going to see where this Apple thing shakes out, but, you know, when we take a look at these, you know, Kevin Hinks, when we were on with Kevin, Tommy and I this morning, we've seen this before, that you have supplies that are down, Apple blows out the numbers, but guess what? The way this is trading, man, and Apple's got a high volume low, my take will go into that high volume low, man. Even though Apple's up nice today. That high volume low out there, 150. Let's game. Stay right there, folks. Come right back.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. Let's go take a look at some of the higher volume stocks out here today. And this still looks like it's going to be a low volume market. We have Pfizer down $1.37. Apple's up 3. You get Micron Tech up 65 cents. Match, that continues lower. That's down 11 bucks. Tapestry, which is the Coach, that is down 9% right now. This thing is getting toasted also. You talk about coming off a high and just going back to where it had the juice, any volume. $55 to close that yesterday. You're trading 47. It's back to a breakout from the last earnings number in February. No, that's an earnings number. That's not earnings. Yeah, they must have come out and said something. Wouldn't be earnings. But what you have here is that you're coming back with way too much volume. So this baby wants lower price. Oh my God, look at that's how this thing likes to trade too. In fact, you're back in the lower range. Once you get under $48, you're back in the lower range. Big numbers. Under Armour. Under Armour came out this morning. That's trading up 67 cents. $16. Bottom line, not a little bad setup. And Under Armour looks like it wants to go run for the high of 16.83 again. This stock has already done some heavy destruction, no doubt about that. So let's go over and take a look intraday and see what kind of juice they can get in Apple coming into the close. Okay, so what you have is this. You're going into the downdraft with Apple of 65 million shares. You've done 37 million. That's not enough. If a better signal, if in fact we get this coming into the close, is going to be pretty intense, and this is what it is. The high of yesterday was 167.36. We're at 168.12. If you close under the high of yesterday, then that signal is much bigger that that high volume low is going to get hit at that 150. You know, as we're talking to the Tigers, the end, you know, plenty of folks are saying, hey, they're going to use the cash to buy back their stocks. There's no doubt that's, I expect that's what you're going to see. Bottom line, maybe they want to buy it back cheaper. It's going to be interesting seeing how this whole thing shakes out. And, you know, we'll see how much cash they want to use. Bottom line is that that is going to get intriguing because when the fight was going on about the tax break in general, the argument was, are they going to buy back stock? Are they going to invest? Not just them, but all these companies. Bottom line, we haven't seen anything yet except for the first week or so, the PR coming out that a few companies gave a $1,000 bonus. Other than that, there hasn't been much action in that whole arena. Goldman Sachs, big number, failure on price, failure on volume on the monthly basis. That wants the lower price. We go take a look at the financials in general. They look the same way. It's only down 3 cents today, but this is subtle, the XLF. We have a high volume low at 26.76, as well as 26.55. You had a small expansion of volume. You know, yesterday did 41 million, today we're 41.7 million. Bottom line, I expect what you're going to see. This baby wants to roll, and we'll see what type of roll we have once this baby starts. If we go over into the XAU, the HUI, XAU out here, let's see where we're at. So the XAU, there she goes. She rejected lower price. In fact, let me look at this volume from yesterday. So XAU, HUI, we don't get volume until 8 o'clock at night. So you're coming into 31 million, and we did 29. Okay, it was a close call. So we did lighter volume. We did 29 to 31. Bottom line, this was yesterday. Okay, so you did have lighter volume. Today we rejected price, and the volume is lighter than yesterday if we look at a few of these larger gold equities. The Gold Bugs Index, the HUI, hit a low of 176 today. That's rejected lower price. We're at 178.85. Ooh, that's cool. Oh, no, it's not. 21 million. Yeah, it actually is cool. 21 million going into 36. So that's pretty good. Going to 25 too. It's not bad. So today we got down to a lower price. You actually filled the gap on the Gold Bugs Index, which is, the gap was 178.29. So we are going to have some heavy-duty action inside that metal market, I suspect, tomorrow, because what we haven't had, they have refused to basically back off, the actual equities. CLF, I believe someone wants to look at CLF, so let's take a look at, this is Cleveland Cliffs, I believe. Cleveland Cliffs, iron ore. Okay, so you're at $7.19. Well, 760 is a problem. Let's see what you're looking at, though. Let me put this on a weekly. Well, if you're day trading this, it's not bad. You know, yeah, you get a high volume spike from last week, 803. That can get tested again. That's big money because you're at 719. Yeah, I can see that. What's stopping it is tracks, is that downdraft from $9.15 to 760. That's on the 25th. That's how that baby is kind of set up. So that's what you get that's where the problem child comes in a big way when you're taking a look at that. Let's go to KL. Let's see what this is. Oh, this is Kirkland. Okay, Kirkland Gold, a gold mining exploration company. Does business in Canada and Australia. Okay, it's taken in $196 million a quarter. They come out, oh, this is cool. They come out before the market opens tomorrow. Well, this is strong. This is good. Let me pull this back. Okay, so you get a weekly. So you blew away 1689. You get the volume behind it. This is pretty cool. I mean, look at this. On the monthly, I have a monster ABC up here. 15.3. Oh, I just missed it. You don't have an ABC up, but I just missed it. This is a strong stock, man. This is, you get some action here, Danny. Okay, so now let me get my bearings here. So we took out this swing with volume. It's not an ABC up, though, but you can get, what, 1680, 13, that's 380. Gets you 19, this thing wants to go like 20 bucks. So you get some action here, man. So, yeah, fundamentally, whatever they got going on, they got some action. Let's see what they're looking for. So, yeah, they're still expanding. So their revenue is it's split up. Where's Forestville? I'm not sure where Forestville is. 837 million. They're looking to do 196 million this quarter, and then a year from now they're looking to do 254. So they plan on printing some money here. Let me go see who's been buying this baby. Let's see. Okay, so Van Eck is 11%. Sprout is 10%. Fidelity is 2%. Stay right there, folks. Come right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. We have the Dow Industrials right now down 93. You get the NASDAQ up 64. S&Ps are up 3. And let's go over to the NASDAQ composite because this is quite a move out here. We've gone from a low out here today of 70.36. And you're at 71.31 right now. So the baby's moved 95 points to the upside. Big number. We take a look at the NDX 100, the 3Qs. 3Qs moved from a price point of 160. Right now you're at 162.75. So bottom line is that you know, you got back. You didn't close the gap here, which is interesting, which is the 159.13. And in both cases, though, what you do have is that what's sticking out here like a sore thumb is you still get that high volume low at 150 inside the Qs. Now, what's going to get intriguing is that you can make the case that when we came down on the second, it rejected the highs of the low as well as the 25th. So this Apple number at 430 is going to be a big number, not only just inside the composite and the NDX inside the Dow Industrials will also be a big number, because what we did also have inside the Dow, that had quite a run, man. I mean, the Dow, bottom line, has rejected the swing point that went after this morning, which is the 23,823. Yeah, 823. We get to 23,808. Rejected it. Bottom line is that we'll see if we get any juice out of it. Volume-wise, what we're going to do out here inside the NYSE, you're at short volume. You're at 510 million right now inside the NASDAQ Composite. We are at 1.6, so the composite is going to have volume. If we look at the diamonds, diamonds came down 4.2 million. You're coming into 5.2 and 7 million. So that has come down into that area, has lighter volume. So this is there's going to be a lot of twists and turns at this 430 mark. Right now, this market is banking that those Apple, whatever they say in Apple, that it's going to be good, that they're going to buy back stock, that Apple's going to go higher, which will affect the indices. Stay right there, folks. We'll be coming back. Lots of numbers after the close. Dow Industrials down 77, NASDAQ up 66, the S&P's up 5. We're coming right back.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Oh, look who we have. It's a beautiful day. Got our man, Jim from Minneapolis. We're going to take him by storm.
Taking it by storm, baby.
I love that. That's a great saying, man. Hey, what's happening, brother?
Good morning, gentlemen. How you guys doing today?
Good, man. Yourself?
Oh, man. It's been the most incredible couple of days since when I called in on Friday, Litecoin busted out of that consolidation on the 2-hour chart.
Okay. And
it just never looked back. It did a 100-point ABC up, and now it's very extended the way I look at it. But holy, I mean, it went up to $420 last night.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Yesterday's gone. Tomorrow's not here. What are you doing right now? Well, we're going to be waiting for Apple earnings coming out at 4:30 today. Market-wise, let's take a look at it out here. We have the Dow Industrials down 64, NASDAQ up 64. How's that? Pretty cool. S&P's up 5.5. Gold contract down $14.40, trading at $13.0480. Silver down 27 cents, $16.03 an ounce. Let's go right into the gold and silver. We take a look at gold first. What you're going to see in the gold market, we're trading down $14.50. You're under the swing of 1309, couldn't hold that baby, and that's going to be a little trouble in paradise inside this metals market. So if we go back, we take a look where we were on the spike high on April the 11th, we were trading at 1369. Bottom line is that if we take a look at this, let's see where we're at. You're 1304, we hit 1302, no reason you can't get into the 1200s. Bottom line is that we'll see, let's see, so 1297, you get strength, as well as 1289. We'll see if that's where we're going to be going on this FOMC statement tomorrow. Silver got whacked also. That's down 1.3%. We take a look at the silver market. Silver broke the bottom of that consolidation, which is $16.18. Now check this out. This is what's real cool about silver, though. We are right at the $16.18. If they can get one more tick into it, that would be a rejection of that price. And silver actually just may be the one that's going to save that gold market. If we go over to the equities now, different ball game. The equities are saying they want higher price. GDX rejected lower price, ended up 3 pennies. XAU, HUI, same type of setup in both of those. XAU went down to 80.19, closed at 81.42 in the green by 27 cents. Gold Bugs Index traded down to 176. Closed out at 178.85, 38 cents in the green. So we get divergence out here in a big way in between the metals, the physical metal, and the actual equities. Oil, let's go take a look at the oil market. We're going to have our man, Mr. Andy Heck, coming up in the next segment. We're going to be talking the API coming out at 4:30. Right now, oil's at $67.41. You've done 669,000 contracts. You know, the way this is shaking out, you know, we've pushed into highs and you're pushed in with volume. So I expect you're going to have volatility at the 4:30 mark. And looks to me like actually we're still going to go at a higher price. So this is going to be really wild watching this oil market. And of course, tomorrow morning at 10:30, we get the government numbers in oil. Notes and bonds. The 10-year note got back under the 119.14. You did light volume, but bottom line, that's the number it has to hold, because that is the bottom of the consolidation. So we pulled back with 864,000 contracts. That's shot money, no doubt about that, but bottom line has to hold price. The 30-year has held price. That never broke down. 30-year pulled, actually, 30-year went sideways today. Yeah, these things want higher price. This is going to be great watching this 2 o'clock tomorrow. So this is what you have. 30-year, we go higher yesterday, 285,000 contracts. You back down today, 215,000 contracts. You're going into 286. So that baby's still saying it wants higher price. King dollar went topside. King dollar does want higher price. Right now, King dollar is trading out of the price point of 92.285, and your next swing high up here, man, is pretty good. The swing high, you know, we took out the swing high from January 9th out here today. The next swing high is up there at 93.480. What I expect you're going to see is that what I expect you're going to see out here, you're going to see some kind of a spike, meaning can it make that swing high? Yeah, it can, particularly on a day when you're going to have the Fed statement out. The Fed statement, folks, is going to come out at 2 o'clock. They don't have a news conference afterwards. The market is not expecting that they're going to come with a rate hike. The market is going to be looking for guidance, whether they're dovish or hawkish inside the rate structure. Right now, the next Fed meeting is going to be on the 13th of June. There's a 94% chance that they will be going up on short-term rates. Right now, the Fed Fund futures rate is 1.5 to 1.7. So if, in fact, they go up in June, that would go from 1.7 to 2. And the effective rate, just so I can give you the effective rate, what the effective rate would be when they base this on the amount of funds going overnight. Right now, so the rate we have right now is 1.5 to 1.7. That's the rate that banks are lending money to each other. The Fed's lending money to them. The effective rate for last night was 1.69. So you can see it's at the higher end of that 1.5 to 1.7. Going to be pretty wild watching the baby shake out. Some of the higher volume equities out here today. You had General Electric basically flat. Pfizer got hit. That was down $1.29. Apple was up $3.84. We had Microsoft up $1.48. Intel was up $1.71. Let's go over to Intel and take a look at Intel for a second. INTC. So we got the chip maker out here. Okay, so Intel was up 26 million shares. And Intel, you know, Intel has that, when they come out with numbers, that has a high volume high, $55.79. That baby wants to get hit. That's the way that seems to be setting up. Defense contractors, they got smoked again. This is pretty intense. I don't think these guys have got hit like this in years. You had Northrop Grumman go in 6 trading days from a price point of $359 to $302. General Dynamics, same type of setup. General Dynamics went from the, let's see, you got 6 trading days from $229 to $194. Raytheon, that just started on the way down. They're all going after their February 9th swing low. Raytheon went from $229 to $197. And Boeing just started, by the way. Boeing hasn't hit that baby yet. It's got, well, actually, no, let's see, Boeing's even weaker. Boeing's already underneath it. No, it's not. 317 we're talking. Boeing's at 324. You did get an expansion with volume as we went to lower price today. Stay right there, folks. We'll be coming right back. We have the Dow Industrials close up. No, Dow down 64, NASDAQ up 64, S&P's up 5. Coming right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We had Snap come out with numbers. Snap closed at $14.13. That is trading at $12.48. That thing is getting snap, crackle, pop, all the above. And the Snap does have a high volume low that's laying out here at $12.10. So that baby is going to get tested. Lots of other numbers coming out, but we get our man, Mr. Andy Heck, as we do each and every Tuesday at 20 past the second hour. Don't forget, folks, Andy's got an outstanding show right here at TFNN every Tuesday, Thursday, 5 to 6 Eastern Standard Time. Get that program right at TFNN. Of course, you get that program at YouTube. Just go to YouTube. Put TFNN in the search bar, folks. Hit subscribe right on your phone. All the programs are going to come right up. And, of course, Andy has 2 outstanding newsletters. He has the Technomental Commodity Report, which is his weekly newsletter. He has the Daily Essentials, which is his daily newsletter. You can come over to our website, get both of them, 30-day money-back guarantee. Check it out. Andy Heck, what's going on?
Hey, Tom. How are you?
Doing great, man. Yourself?
Doing good, doing good. So, interesting markets. Want to point something out. You know, look, we had the dollar make a new high for 2018 today. We had gold and silver make new lows for 2018. But the Fed is meeting, the FOMC is meeting today and tomorrow. They'll come out with an announcement. This is really kind of a repeat pattern of every single FOMC meeting we've seen since late December 2015. The dollar tends to rally going into these, bonds come off, the gold and the silver tend to come off during it. That's why we made lows in December last year, lows in December in 2015, and in 16 and in 17. I think that, when the Fed does nothing tomorrow, we might see a rebound in these prices, and the gold stocks are telling us that.
Yeah, the gold stocks are looking good, man. I mean, it's pretty intense, actually, folks, because the metal, the metal's down, $50 from, April 11th.
Right.
Bottom line, the equities look good. Hey, right. We know that we're going to find out, man.
We'll find out. We'll find out. No question about it. Listen, the range in gold and silver has narrowed dramatically.
It has.
Since the end of 2015, we have about a $330 range in gold. The range this year is like $63.
Yes. No, it definitely has.
Right. So, and in silver, same thing. We had like a $7.50 range. Since then, the range is narrowed to like $3 and change in silver. So, these markets are just plodding along here. We still have a dangerous geopolitical landscape. We have a very interesting U.S. domestic political landscape. And there's lots of issues out there that could turn these markets around very quickly. I would not get short here, down here at the lows. Even if gold's going to go down to $12.50, it'll still find a lot of support down there.
Yeah. Well, it's interesting when you say that geopolitical, it's dangerous. When you look at the defense stocks, it doesn't look dangerous. The defense stocks, I've never seen them get smacked like this so fast.
Well, they're getting smacked. They're looking at Asia. They're not looking at the Middle East.
I mean, 15% in 6 days is pretty intense, man.
Absolutely. They're looking at tariffs and they're looking at Asia. They're looking at peace on the Korean Peninsula. But the Saudi-Iranian problems, the nuclear non-proliferation agreement, those issues are not going away anytime soon. As a matter of fact, they're likely to take center stage in coming weeks.
Yeah, and that's what the oil market's probably all about, because that oil doesn't seem to me like it wants to back down.
Me neither. And, very interesting. There's some big oil hedge fund manager. What's his name? Pierre. Let me see. I wrote it down. Pierre Anderond. He's one of the most prominent hedge fund managers in the world. He recently said, and I quote, that the reluctance of energy companies to invest in new production means that $300 oil is not impossible within a few years.
Oh, boy.
Right. So I don't think oil's going to back off that much. Can it go down to $60? Absolutely.
Yeah.
But chances are it's going to come storming back. The Middle East is the most turbulent region in the world. There's not a lot of investment in the oil sector. I mean, U.S. shale production is up big, but around the world, there's not a lot of capital investment in petroleum. Everyone's looking towards electric cars and all that kind of stuff. But oil is still the blood that runs through the veins of the earth, and it still powers the earth. So,
And now we're coming into the driving season, right? You know?
Right, exactly. Gasoline prices. Look, the crack spreads are very supportive. The oil's in backwardation. You got Brent trading at a $6 premium to WTI. These are all supportive signs for crude oil. Now, can it come down because the dollar's getting stronger? Absolutely. I mean, is a little bit of a correction overdue? Just like it was in the dollar? Absolutely.
You know what's intriguing? That is intriguing, man, that oil is up here and the dollar comes. That's even stronger than that. Yeah, right.
I'm not buying into this dollar strength.
Listen, man, when I hear, so listen, folks, if you've been listening to the, whether it's, Bloomberg, I don't listen to CNBC, but they're, bottom line is they're saying, yeah, this is tremendous. It's like tremendous. What are you, crazy, man? This is the first bounce that we had in a year and a half.
Right, exactly. And it's so long overdue. Look at interest rate differentials. This thing has masked a really bearish tone. Plus, the administration has been very vocal that they do not want a higher dollar. They want U.S. companies to continue to thrive overseas, and a higher dollar is going to put an end to that.
Well, I'm wondering, even on the defense contractors, that, is that what's... Those money managers got out of... The amount of selling in Northrop and General Dynamics and Raytheon is extraordinary, man. It's just like those are big numbers, man.
Like I said, I think they're looking east to Asia, and they're not looking the other direction to the Middle East. You know what I mean? That's my take on it. But the dollar, hey, this bounce was overdue. No question about it. Let's see when the Fed does nothing yesterday what the dollar index does. Tomorrow, rather, what the dollar index does.
Right.
You know?
Listen, the XAU, the HUI, they both rejected lower price. Gold, the GDX did. I mean, you can name them. They all did. So.
Right. So, hey, and if we look at some other commodities that are highly dollar sensitive, they're doing pretty good. Look at the wheat price.
Well, it was up 3.6% today.
Look at the price of corn. It's over $4 a bushel. Look at the price of coffee. Wow. That's coming back. Look at the price. People look at gold. They look at oil. Look at the price of lumber. Another new record high today, Tom.
Yeah.
So almost $600. This puppy was $214.40 in September 2015.
That's intense.
It's almost tripled.
Well, it's intriguing because I wonder, when that is going to get down the pike retail. I mean, it hasn't hit the retail business that bad yet, but it has to. I mean,
it's inflationary.
Yeah, big time.
Right, big time. So, and look, rates are going up. Their rates are going up because, listen, in our lifetime, Tom, we've never seen rates like they were over recent years. They're ridiculous, artificial levels. So, people are freaking out because the 10-year Treasury's 3%. That's a low rate for me. In my life, if I look back over the last, 30, 40 years.
That's correct. But what you do have is that you have plenty of, we have 2 full generations behind us that have never seen a rate go up.
Right. That makes for explosive volatility.
Oh, man. Stay right there, folks. Andy and I are coming right back. And when we come back, we are going to have Apple numbers for you. And as well as we're going to have the oil numbers for you. Dow finished down 64. NASDAQ up 64. S&P's up 5.5. Andy and I are going to be coming right back, folks. Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So Apple closed at 169. We are trading at 172. Okay, so the estimate for revenue, let's see, they're going to have $100 billion buyback, folks. They're boosting their dividend by 16%. Let's see, reports second quarter revenue of $61 billion, equal analyst estimates. That's 16% growth from last year. It's faster year over year. Exposure, let's see where this is. Let's see if $1 billion is enough. Well, we're at 175. So the Apple, you know, this is where this option market comes in, which is pretty cool. Let's see, 5, 6, 7. They were looking for a $7 move, a 5.3% move, and that's what they got thus far. So we'll see how this shakes out as we go through the next 15, 20 minutes. Okay, so we're going to get the oil numbers too, Andy, and I will get those as soon as they come across also.
Lots of action in Apple.
Oh, yeah.
Oh, boy.
You know, we'll see where that shakes out. You know, bottom line is that, yeah.
$100 billion buyback.
Yeah, $100 billion buyback.
Wow.
And
that's corporate tax reform.
Corporate tax reform, yeah. So much for investing it, right?
That's where it's going. It's going back into the stock. A lot of companies.
That's exactly what they did last time. I remember the last time they did this, about 15 years ago. They claimed.
Well, we have to remember that the management of companies, the CEO's job, CFO's job, is to boost the price of the stock.
Listen, I understand that, but that isn't the rap when they're cutting taxes. The rap when they're cutting taxes is that it's going to.
Well, you're talking about the politicians. I'm talking about the guys who run the company, the guys and girls who run the company.
I'm with you. Right.
That's their job, to maximize shareholder return.
Right.
And you know, if they think that they can make more money by buying the shares back than by reinvesting in the business, that is exactly what they're going to do. It's rational financial behavior.
I'd question that, but that's, you know. It's when you say rational behavior, that puts more money in their stock options. I mean, we've had a million freaking scandals, of buying back, you know, so that the options go up. You get the exercise of the options, and great, you know, the rest of the people, you know, basically.
What the problem, Tom, is, in my opinion, and you could feel free to disagree. The problem is that here in the United States, in Europe, we're very centered on quarter-to-quarter earnings. You know, if you compare us to communist China and other places, you know, China is a capitalist communist country in many ways. They focus on a very long-term, 10-year, 20-year, 30-year plans. So they're not quarter-to-quarter driven, so they make much more investments into their infrastructure, into their businesses. Here, we're very quarter-to-quarter orientated. We've always been, at least for my lifetime, your lifetime.
And the market's been like that forever.
That's what drives financial behavior, you know?
Right, so, no doubt.
That's what we're seeing. Anyway, you know, a lot of interesting stuff in commodities. You know, you see on a day where the dollar breaks out to the upside, you know, goes above the 92 level, new highs for the year. You're going to have a lot of dollar bulls coming out of the woodwork.
Oh, they came out pretty quick. I would say that, yeah, they come out pretty quick, right?
Right.
Okay, so yeah, let's go. I got it. Okay, well, I don't get the whole thing. Okay, API said the report, U.S. crude stocks grew 3.4 million barrels. That's a big one. Let's see.
It's a big one. Let's see what the gasoline
the next one comes out with. Okay,
it's always the products.
Okay, so Cushing had a plus 725,000 barrels. Gasoline was plus 1.6 million. Distilled, look at that, 4.08 drawdown million.
4.08
million
drawdown?
Yeah.
You know what? That's not that bearish.
No? Okay.
Not that bearish.
Wow.
And distillates, remember this, you know, that's heating oil, but it's also jet fuel.
Right.
It's also diesel fuel.
Right.
It's all of these distillate fuels. And the bottom line there is that is probably the one oil product that is the commentary on global economic growth.
Yeah.
And that's a very positive number.
And guess what?
And it's very balanced. We're very balanced. Look,
oil's flat. It hasn't moved. It's pretty amazing, man.
It should be flat here on that number. The distillates basically save the oil.
Yeah, right.
For the short term.
Yeah, I can see that. Yeah.
So we'll see what the EIA comes out. There's been some divergence between the figures lately. Let's take a quick look, if you don't mind, at natural gas.
Okay, cool.
Which is butting up against $2.80. I think finally, we're going to get an injection this week, 40 to 50 BCF. That's what I'm expecting into inventories. First one of the year. By the way, we got to wait till April 27th this year for the first injection of the year. Over the past 10 years, the first injection came at the end of March. Now, we also had our first withdrawal a week early. So actually, we went 5 weeks longer in the withdrawal season this year than over the past decade. And the price of natural gas ain't doing nothing.
I know.
It's doing nothing.
Yeah.
280.
Well, I guess what also happens is that if the price of oil stays up, they're going to pump more oil, so it means we get more gas, right? Because, you know, gas is a byproduct. I mean, it's not in the pipe, it blows off, but the bottom line is a byproduct there. I'm
going to make a crazy prediction that goes totally against my fundamental nature here. I'm going to say that we're going to get a rally in natural gas when the EIA reports an injection, the first injection of the season, and it's larger than the market expects.
That's perfect.
Only because that makes absolutely no sense.
No, it's perfect. I'm with you.
Right. Yeah, it's just the way the market's been trading.
No, I can see that get twisted like that.
Sometimes you got to go against, you know, just the way the markets move. They go against all logical and rational reasons.
Particularly natural gas does.
Yeah, there's nothing more irrational than natural gas.
Yeah,
Tom.
and you know, hey, listen, just could have to do with just the trading at the exchanges in general, right?
Exactly.
So
maybe you have too many shorts in there, you know, waiting for the first injection, and they all cover at the same time.
Yeah, so this wheat move, let's just go back to wheat.
Yeah, I was just going there.
That's a big move out there today, man.
Yeah, we got a signal. You know, I like to look, and I can't put a chart of it up here because I don't.
I got it up. I have it up.
No, I have the wheat up, but I don't have the Kansas City wheat up.
I see, okay.
Take a look at the Kansas City wheat, because the Kansas City wheat spread versus the Chicago wheat spread was trading at a discount for Kansas City wheat. And a lot of bread manufacturers in the United States priced their requirements.
Red winter wheat, right? Yeah.
It's hard red winter wheat.
Okay.
They priced their requirements off that Kansas City price. And the discount was because the price was falling of wheat since 2012, and there was no impetus for the consumers to hedge. Now we're seeing a reversal there. The Kansas City wheat has gone to a premium, up to like 25-cent premium, and that's highly supportive of the price of wheat. And I really like wheat because of what's going on in that spread. And I've been kind of writing about that and talking about that for a while.
Okay.
So, you know, let's put it this way. Also, sanctions on Russia. Russia's a big supplier of wheat to the world. That's going to also support U.S. Wheat exports if we don't get ourselves into trouble with tariffs here over the coming months. So it's up to the weather, but wheat's looking good, and wheat could take the rest of the grains with them. And wheat is the most political commodity out there because everyone needs to eat.
And now we get the FOMC tomorrow at 2 o'clock. We get our man, Mr. Andy Heck. He's going to be coming up, growling and prowling with you folks in 20 minutes. Just go to TFNN.com, hit Tiger TV. If you're listening in your car, go to YouTube, put TFNN in the search bar. Andy, thanks so much, man. Appreciate it. Look forward to the program, 20 minutes.
Thanks, buddy.
Stay right there, folks. Come right back.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. So Apple closed at 169. You're trading 176. It's traded as high as 178. So here's some of the numbers on it. They are going to do an additional 100 billion buyback. Now check this out, folks, because they haven't used yet. This is what they're saying. They haven't used 210 billion buyback that they are doing this quarter. They're not, okay, this comes on top of the existing $210 billion buyback to be completed during this fiscal third quarter. So Apple's buying a lot of their own shares back. That's the bottom line. There's going to be another $100 billion on top of that. China is growing at 21% year over year. Europe is closing in to become the second most important region for the company. Japan saw strong year-over-year revenue growth, up 22%. Revenues in the U.S. are up 17%. They, let's see. Okay, next. Wearable devices. This is Tim Cook, his quote. Let's see. He's not worried about the iPhone X. He's saying it's continued to be the most popular phone for the company. The actual numbers, $2.64 was the estimate. They made $2.73. Cash at the end of the second quarter was $267 billion versus $285 billion at the end of the first quarter. Their tax rate is 14.5%. Let's see. Oh, here's the number of iPhones. Second quarter, 52.2 million iPhones were sold. Sales growth, revenue, let's see. Okay, so inside their service business, what they're saying is that their service business, and I'll break this down for you for a second. Let me look at this for a second. So when you break down Apple, this is how their numbers work out on the differences they have. So this would be a yearly basis, folks. Out of a year, their iPhone, this is 2017, their iPhone was $141 billion. Services were $30 billion. He's saying that, where's the service again? Okay. He said the App Store is the biggest driver of Apple's service business, which strong year-over-year growth. He also said the company has 270 million paid subscribers across applications and its own services, which is up 100 million year-over-year and 30 million quarter-over-quarter. Man, that's a big number. That is a big number. Now the CFO is talking. The Apple CFO rejected the idea that the iPhone at $999 is priced too high. He said it was the first time that a high-end iPhone was the top-selling iPhone model. He also said the iPhone's market share grew in December and March quarters. Let's see. Well, so bottom line is that you get some numbers out there. The real question is going to be, you know, is Apple going to hold? Because what's interesting here, when you actually look, you've hit 178. You're at 176.54 right now. Your high is 183, I think, period. Let me see. Yeah, 183 is the high. 183.50. Bottom line, they got to get it up to the high. We'll see how that shakes out. They got $310 billion of buying power. $210 billion of that is going to be in this quarter. So what we did have, so as soon as that come out, a couple of their suppliers, if we look at Cirrus Logic closed at $37.89. That's trading $39.50. So that got a little pop out there. Let me pull up the rest of these. Well, there's a lot of other ones too. The Qs, the three Qs closed at 162.78. That's trading up a buck. That's 163.76. And 160, well, the swing high out here, that's April 18th. April 18th is, it looks like, where this baby looks like it wants to go to. We'll see if that holds. SWKS, let's go take a look at SWKS. That closed at $90.90. That was already up $4. That's trading up another $3 right now. These are off lows, though, too. Not off lows. Yeah, the stock has gone from 115 down to 86. Let me go look at the one we were looking at for CGNX. CGNX. This company here does 20% of their business with Apple, of the gross revenue. That closed at 46.10. That is trading, look at that, that's not moving. That's trading at 46.12. So not much action there. A few more equities. JNPR, Juniper Networks came out with numbers. Juniper closed at $24.74. That is trading $25.75. That's still at the lows. Let's see what they had to say. Okay, the estimate was 26 cents. They made 28. They beat by 2 cents. The revenue estimate was 1.16 billion. They did 1.18 billion. No big deal, but they did do some action. We go over, take a look at excuse me, folks. Coherent. Coherent closed up $7. This is at 1.76. This was at the close. This right now is trading down $2. It's nothing. Oh yeah, this stock has got killed. Man, this stock has really got killed. What does this stock do? This stock went from $329 to $176. So, global company manufactures self-reliant laser-based plutonic products. So let's see what they are saying. Okay, the estimate was $3.49. They made $3.37. So that was slightly lower. Revenue estimate, $481.7 million. They made $481.1 million. This stock has got really smoked, though. This is pretty amazing, actually. This has been a one-way trade. It went $329 January 31st. Down to 157. Man, that is one hit. This is a parabolic stock anyway. This started out October of 2015 at $52. Went parabolic. Last time it had any volume, if you want to take a look at a parabolic stock, this is one. Last time it had volume was 273, extended itself all the way to 329, and then just fell apart in about a heartbeat. That's pretty intense. No two ways about that. Let's go take a look at the SPY, see if it's put any juice into the SPY. SPY out here closed at 170. This is interesting. Oh, no. I knew I was having the wrong stock up there. That didn't make any sense. Okay, so if we look at the SPY closed at 264.98. That's trading up 40 cents into the close. If we do go back to Apple just for a second, Apple's hanging at that 175. So 175 on Apple. So it got the expected move in the option market. The expected move in the option market was 5.3%. 175 is going to bring you the swing high from last week was 178.82. And that's coming right into the downdraft that was created in January as well as March. So that's where the battle's going to be setting up with Apple. Stay right there, folks. Coming right back. And, of course, then we get our man, Mr. Andy Heck, coming up, growling and prowling with you. Dow Industrials closed down 64. NASDAQ up 64. S&P's up 8.5. We're coming right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. With over $56 million in cash and over $66 million in working capital, Great Panther Silver is positioned as a company with a solid foundation and poised for growth. While completely unhedged to the price of silver, Great Panther retains 100% ownership in 2 producing mines in Mexico, which is the top silver producing country in the world, along with future potential production in Peru. Great Panther is highly leveraged to the price of silver, and after a great year of performance in 2016, Great Panther Silver has a strong outlook for 2017 as well. With good liquidity in trading and strong fundamentals on the balance sheet, while remaining completely unhedged to the price of gold and silver, now is a perfect time to take a closer look at this equity. If you'd like to find out more about Great Panther Silver, then go to greatpanther.com or check them out on the NYSE market, symbol GPL, or the TSX, symbol GPR.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. And folks, as you come over to our website at TFNN, our man, Mr. Dave White, he is going to be doing some option trading right near expiration. This is going to be a dynamite workshop for Dave's subscribers. You can be a subscriber right here, right now. Take any one of his newsletters. You get a 30-day money-back guarantee. Now, this is how it's going to shake out. Dave is going to be doing this workshop May 16th. That is 2 days before option expiration. Bottom line, check it out on the front page of TFNN. He's going to be analyzing the swings, the expiration day scenarios. And if you get, bottom line, one of his newsletters right now, folks, with the way that this shakes out, as you come up into option expiration, he'll be talking about these inside his newsletter, because there's a lot of work that goes into this when you're playing option expiration 2 days before the fact. And what you get with that is you get big leverage. You're basically, your premium has already decayed. So bottom line is that when you're looking for high reward, risk is lower risk. That's what Dave's going to be looking for. He's going to walk you through that thing live. Check it out on the front page of TFNN. You can test drive either his Path of Least Resistance or the Tech Inside. Either one of them are going to get you into that workshop, 30-day money-back guarantee. Market-wise out here, bottom line, Apple come out with numbers. Bottom line, you're up $7 after the close. 169 was the number. We're at 174.80. My take on this too, if you have Apple, man, I'd move that thing out right now, because guess what? To put another $100 billion into Apple, to turn around and have 210 on top of it, guess what? You're only at 175. We were at 175, folks, 8 trading days ago. 1, 2, 3, 4, 5. Yeah, 8 trading days ago. It's going into a downdraft. Bottom line, it's going to take a lot more than 175. That's just how Apple works. People would want to make more than $7, and in fact, $6. Putting up $169 per share. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership, let and fly with it. Thanks for being here, folks. Have a great night, safe night. Stay right there. Man, Andy Hex coming right up next. Go get him, folks.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.